You're all very welcome to this Practice News webinar on Friday, the 3rd of December. It's our last Practice News of the year. You're very, very welcome. Practice News, of course, is news for you as practitioners. So what will we be talking about this morning? Look, there's a load of things to talk about. I'm going to be talking to Anne Cullen later on about practice monitoring and the things that are coming up on practice monitoring visits. So I think that's of interest to anybody in practice who's subject to regulations. Looking forward to that. Going to be talking also about Brexit 1 year on. Chronic Clahacy is going to be talking to Jeremy about the impact on firms north and south of the border, but especially north of Brexit and the impact it's had on practices and their clients. And looking forward also, of course. Tax. Delighted as always to have Nora Collender on to talk to us about tax and what's new, what's changing, what you can be expecting next. Auditing less complex entities, there's some relief on the way. I mean, obviously people again and again and again, a constant theme, even during the week their practitioner was talking to me about the disparity between the amount of documentation that you've got to put on a smaller, less complex audit file. You've got to build out huge files for fairly uncomplex entities. So is there relief coming our way? We hope so. And Jeremy's going to talk to you about that. FRS 102, once again, a fine standard, no doubt, but is it just a bit too much for the sort of entities who need to apply it? Are there too many requirements, too many net present value calculations and such like? Or is it indeed, is it about to get more complex? Have your say. And once again, Jeremy's going to talk to you about that. And also, once again, if I had to pick out all the things that people come to us and talk to us about, trying to get and keep staff, it's a constant challenge. So we're going to be going back and just doing a little refresher on that one for you. Right, okay, so there we go. That's what we're going to be talking about over the course of today's packed session that we're going to be getting to, taking it all the way up to 11:15. I think we're slated to finish. Now, people that are going to be on, this is our team now. Nora Collender, our tax lead, is on to talk about tax. As I said, we've got Chronic Clahacy, our public policy lead, and Colin, the head of audit monitoring, and of course myself and Jeremy, as usual, from the practice consulting team. And our brief is to help you in practice. As always, I like to give people some sort of a notion of what the demographics are of the people on this morning, just so as you can understand. To try and reproduce the feeling of being in a room with these people, but this is who you are this morning. So good spread, as you can see. We've got the map of the island here, and you can see people from all over, and we're delighted to have you all. And that's FCAs in the main, members in practice in the main, also employed in practice, some members in business also are coming along to hear what's new. And of course, there's a lot of stuff here that's relevant to your good selves. And then mainly Republic, some North, more or less reflecting the spread of membership, which is great. The age distribution 45, good split between male and female, and that's you this morning. Just our disclaimer, as always, because we're going to be raising technical matters, we have to say, look, we need to disclaim this thing. These are slides and these are summaries. We're going to be flying along. I'm just trying to anticipate my conversation with Anne, where we're going to hit as many points as we can, but obviously all of those are going to be really summarized. So you need to go back and just check your references. That's what you got to do. Don't rely on this. This is here to raise your awareness, not to give you the final word on any of the topics. Right, that's great. So now that's me done at breakneck speed, I hope. Now I'm going to pass you over to Jeremy, who's going to give you some practice updates. So yourself, Jeremy.
Indeed. Thank you very much, Conal. Yeah, as usual, I'm going to share with you actually 3 stories from our December edition of Practice News, looking at audit, financial reporting, and actually recruitment as well, our lead story. Always just to say to you as well, our actual December edition was actually sent out by email to all members in practice who have actually signed up for our practice consulting emails. It was actually sent out just last Wednesday morning, so you should hopefully receive the link and already been able to download our Practice Matters magazine. If you actually haven't, of course, as ever, you can actually go to our webpage here where we have the December edition, but also the past editions as well. And they're always, let's say, a very good resource to go back and over the last, particularly 5 or 6 over the last year, to see what is relevant to you, what's the new and upcoming news. It's a very quick way of doing it. So Conal, if you can click ahead again. And the first story I'm going to talk about, just as you said, Cornel, I often particularly in the last few months, have got practitioners coming to me asking, and maybe they've heard say about this, is there anything coming up on the audit of less complex entities? And yeah, the actual International Auditing and Assurance Standard Board, they actually have basically been going through an ongoing project in this area. It's been going on about 4 years now, but just over the summer months, last June, July, they actually issued a exposure draft of a proposed paper on the international standard on auditing of financial statements of less complex entities. And you can download that and learn a little bit more at the link there when you actually get the PDF of the notes, which Chris will be dropping into the actual chat function very, very soon. Now, the whole idea, as Cornel said, is it is definitely a question that's often raised with relation to small to micro companies here in the Republic of Ireland. Are the current auditing standards just too complex for those? They're obviously created for much larger group entities, multinationals and so on as well. So this is really seen as an opportunity to review, discuss and debate at an international level. Could there be a better audit standard found for these less complex entities? Now, the key audit matter here with relation to this actual less complex entities exposure draft, this audit standard, if it did come into being and was approved, it's intended to be a standalone self-contained standard. So first question here people will often ask, and to be clear with everybody, is if it does come into being, there won't be a mixing where you can pick and choose and cherry pick what you want from this standard and from the full ISAs. You either go with the less complex entity standard or the full ISAs. Mixing won't be permitted. Of course, in your audit opinion, if this was applied, it'll still be a reasonable assurance audit opinion, but it will be very clear in your audit report that you've actually used this actual standard and worked against this standard. That's very, very clear and very, very important for transparency. Some of the changes in this, and if you click through to the documents, you're an exposure draft, you'll learn a little bit more about these, but some of them are around accounting estimates. And there is a question in there as well with relation to whether this should be applicable for group audits. The current exposure draft says no, if the company is part of a group, that this wouldn't be applicable for them, but it is there. And of course, as well, the question coming more longer term as well is, if you do end up having two audit standards, you have different training, and it can be quite confusing for staff as well. So there's a concern and a worry there. Cornel, if you can click ahead again. Great. So this, as I say, exposure draft came out over the summer months, and the Institute's Audit and Assurance Technical Committee are currently considering the proposal, and of course are the implications of it for our members if it was adopted in due course in the UK and Ireland. Now, of course, we really want to get your input as well as auditors of small companies here in the Republic of Ireland and Northern Ireland, the UK. So to do this, we've actually set up a web page, and you can get the link there. It gives you some more background details in relation to the actual the exposure draft itself and a link to the IASB pages. And we're also looking for your feedback, so you can give your feedback via the technical email there. And of course, all of this will be put together in an Institute response and feedback to the IASB. And the whole consultation is open until the 31st of January 2022. Now, the big question everyone asks me and is wondering, what would be the potential timeline for this? And it is hard to put a timeline on this and whether it will come into place or not. The actual standard at a global level would probably not be available and ready until probably at least the end of next year, with follow-up consultations and so on, based on what's being actually put together here and more exposure drafts. Then again, it has to, of course, feed through at a UK and Ireland level, FRC and IASA. So looking at all that and time to implement it, if it was put in place in different weeks, you probably are looking at a 3 to 4 year time frame, 2025, 2026, before it would be potentially in place. So it gives you a rough outline. It won't be here very, very soon, but there is potential light at the end of the tunnel on this. Cornel, if you can click ahead again, that's as much as I'm going to say on that one. Just
before you finish that one, Jeremy, just one point I would make, if you don't mind, is as I was reading that, I couldn't see a direct reference to the size of companies. It seemed to me that they are really trying to focus on the complexity of companies rather than the size, and they're talking about sort of your owner-managed type business. So that can cover quite a very broad range of sizes of businesses. So that will certainly make it interesting, I think, because that would cover most of the SME world, and it Yeah, this could be the future.
Indeed. Yeah. I suppose when we get down to the local level, UK and Ireland, obviously it will obviously have to be at an IASA or an FRC level, and they will try to match it into company law and company sizes there, but also try to see what comes through from the IASB. So it's hard to get a gauge at the moment, but that is a fair point to make, of course. Yeah. Now, the next thing here is, and it's one I actually mentioned earlier in the year, back about April time on Practice News, is relation to FRS 102. And it's that time again where the next review of FRS 102 is taking place. And Conal, if you can click ahead. As I said, the FRC is in the early stages of its next periodic review. The first review of FRS 102 and the other standards 100 to 105 in total took place about 2016, 2017, and you actually had the actual updates that came through at that stage. Now, again, 5 years on, early 21, there was this consultation put out by the FRC, I think about March, April time. And basically here, it was to get the views from the stakeholders on the changes that might be considered as part of the review. That actual consultation ran until the 31st of October, and the Institute Financial Reporting and Technical Committee, on behalf of our members, would have made a representation. You can actually see the detailed representation here to the FRC in late October, and they highlighted a number of areas of importance. I've just picked a couple of them. There's more detail again even in Practice Matters magazine for December. But the first thing here was obviously there's a number since 2017. There's a number of IFRSs such as IFRS 9 on financial instruments, leases, and so on as well, and revenue 15 and 16 that have come out. And again, the extent and the timing of incorporating the rules of newer international standards into FRS 102 will be a challenge, and also be challenges with relation to these standards potentially applying to smaller entities. And one of the suggestions here is that perhaps before making them applicable to everybody, that they should be road tested on a number of FRS 102 size entities to see how it works out, to refine the approach, whatever it may be. So that's one thing. Conal, if you can click ahead again. And the next thing here is another suggestion is the committee suggested the FRC consider whether any areas of FRS 102 are overly complex. And there's a number of updates on that in the appendix to our representation that we sent back. And I know many of them can spring to mind, such as Section 11 of FRS 102 on basic financial instruments, deferred tax, different things like that. And so we've made some representations there for the FRC to actually look at in more detail to see, can they basically look at these and see, yeah, do the benefits really outweigh the actual costs of implementation, and is there a way of simplifying? So anyway, looking ahead, what's the next step here? Obviously, the FRC will get back in our representation, but from other bodies and for private members and so on as well. And they'll tweak what they've put out there for FRS 100 to 105. And then there'll be a public consultation sometime in 2022, I imagine spring, early summer. And looking at the moment, the finalization of this process, it's unlikely, I would say, that we'll have the new FRS 102 in place and effective earlier than 1 January 24. There'll obviously be a lead-in period as well. So just to make you aware, there will be some changes coming along, but it is 1 or 2 years down the line. And keep an eye out. We'll be updating you, of course, in Practice News and in Practice Matters on these things. Conal, if you can click ahead again. My final piece here, and this is actually in reference to our lead article in Practice Matters, and the lead article was by our colleague Dave Reardon, our Institute Recruitment Specialist. And basically here, many of you I'm sure will remember that Dave was on in our last edition of Practice Matters with his colleague Karen Lanigan, and they went through, I suppose, many tips for practitioners on how to improve their recruitment process and make it more effective. It's a very challenging market, as we all know, to both hire both qualified staff, but also trainees even, but also to retain your staff. And Dave has been very good here in about a dozen or so easy to follow tips. He has just given what his insights are from his years of experience with practitioners and also across the wider financial recruitment sector. And basically have a read of those. They are a very good summary. And again, if you do have any questions, I know Dave and Karen are all available to talk to practices, and I've talked to candidates and so on as well. So you can contact them at the careers@charteredaccountants.ie email address. Now that's my quick whirlwind tour. I'm not sure of any questions coming there, Conal, anything like that. But can you see anything there?
No, we've no questions. The one thing I would say to people is if receiving Practice Matters, bear in mind for some time now, it has been electronic. I think for about 2 years now, it's been electronic. So just if you haven't got it, certainly to ask us and we'll sort it out for you, or else just go on to the practice consulting section of the website and you will find the latest edition of Practice Matters there where you can download. So Jeremy, back to yourself, and I know
that's, as I say to you, well, that's a very good point to raise, as I say to you, and definitely if you haven't got it in an email or you're not getting emails from Practice Consulting, you can go in and change your communication preferences as well in the My Account section of the team, because there's some very good updates there, including your Practice Matters and your emails about, of course, upcoming webinars. Yeah, that's my technical piece done. I'm delighted now to actually hand over to, I hope it's a very popular piece, to my colleague Nora Collender. And Nora, hopefully you're there, I can hear us and so on, and you're good to go. I know it's been a very, very busy period with since we last spoke in early October, what with budgets, what with all the tax deadlines, CO deadlines, everything. Listen, enough of me. I'll leave you take the floor and tell us all about it.
Thanks a million, Jeremy. Well, just starting off on the income tax deadline to give you an outline of what your work culminated in. There was over 560,000 tax returns filed, and that's 10,000 more than last year. So there is a lot of activity still going on in businesses that are driving self-assessment, and those 560,000 tax returns represented 2.7 billion of tax collected. And you'll see this morning that there was a very good news on the tax front in terms of revenue raised in November. So it was a record month of 11.3 billion in tax. So it definitely seems to be coming out in the tax returns anyway, and the tax receipts, that the economy is doing really well at the moment. In terms of members that were in difficulty due to COVID-19, 144 agents and accountants availed of an extended deadline with revenue on a case-by-case basis. And those 144 agents, they represented 4,700 tax returns. So those tax returns have yet to be filed. The process is a manual process. Revenue systems are all geared up, as you can understand, for the 560,000 tax returns. So those 4,700 tax returns, the surcharge will have to be manually lifted. Now, revenue does have the list from the agents and from the accountants, so they will be checking that list once the date for which they have agreed the submission of the tax return with the agent comes about, but they will have to manually lift the surcharge. So it would be really recommended for you to talk to your client and let them know that there might be output from revenue system indicating that a surcharge is applied, but that surcharge will be lifted. It's as well to have that conversation so nobody gets stressed when they see a surcharge document coming in the door. Letters will also be issuing to businesses in the debt warehousing scheme. As we are coming to the end of period 1, which is the period in which all the debt for the warehousing scheme is collected or gathered. Revenue will have 2 letters. One will be saying everything's up to date, here's a schedule of all the debt that's warehoused, and the other letter will be saying your compliance records are showing that there is some slippage, please bring those up to date. And then they'll be writing again in the new year, setting out how much exactly is in the tax debt warehousing scheme. As we move into period 2, which is the period in which there's 12 months interest-free applied to that tax debt. In March, revenue will be issuing an enhancement to the phase payment arrangement. And the objective there is to combine tax debt that is in the warehousing scheme and non-warehousing tax debt, just to make it easier for taxpayers and accountants to be dealing with the one phase payment arrangement. I don't know the details of that yet, but they will be issuing in the new year, hopefully before the actual system goes live in March. Revenue will also be doing a bulk rate review for ERCT for the business division taxpayers. Now, this hasn't been done in quite some time as part of Revenue's approach to trying to be supportive over COVID-19. So taxpayers will get letters from Revenue if there's any kind of a compliance slippage, which will give them an opportunity to bring their RCT up to date before they are moved onto a higher withholding tax rate for RCT. So those letters will be issuing shortly, and the bulk rate review will be going ahead, I understand, in early 2022. Just to give you an update also on professional service withholding tax, I have given you a background information there that there is problems for doctors operating in general practice, whereby the credit, the electronic credit for the professional service tax withheld is issuing in the name of the treating doctor, who may not be the doctor who's actually taxable on that income. In many circumstances, the income from the GMS is actually that of the practice, and the practice then employs doctors. However, they are getting the electronic credit as things stand. And we have raised this with revenue. We've had numerous TALC discussions. We've made a technical submission prepared by my colleague Maud Clear. Revenue at the most recent meeting have confirmed that they are, after meeting the HSE, and they have established, outside of what we were telling them, that it is indeed a fact that GMS contracts are set up such that the HSE has to put the name of the treating doctor on the contract, and hence any professional service withholding tax output is in the name of the treating doctor. So there is a recognition there. It's understood there is an issue. The message from revenue is that they are looking at it. They need more time. It does involve some work on their behalf to try and come up with some kind of a fix or some kind of a practical arrangement for it. And it wasn't something they had been aware of until we brought it to their attention on foot of feedback from our members here. Now we have flagged it that this is certainly an issue that we see could be a big problem coming up to the deadline next year, when these doctors or the practices will need the credit for the professional service withholding tax. So they are mindful of that, and we have flagged that with them. So we have the next number of months now to try and work with them and see what is the arrangement. And I do appreciate there may be other connotations on this particular issue that may affect other sectors like dentists or vets or lawyers, but like the objective now is maybe to work with the revenue on the GMS, the GP issue first, and then we'll try and include all the other issues then as we make some progress there. The other big deadline, of course, that you were all working on, whether it was directly or indirectly, was the local property tax deadline. That we made a number of representations to revenue in respect of local property tax. The first representation was to do with self-assessment. There were what we would have viewed as mixed messages coming on self-assessment obligations for taxpayers on LPT. And the concern is that ultimately, if there is an issue, individuals come to their accountants to try and sort it. And I know from feedback that this is it can be quite time consuming and possibly low value work. So just to try and nip it in the bud before it becomes an issue, we made representations as to what exactly are the obligations and what can people really depend on in order to establish their valuations. And we got a letter back from revenue stating that they wouldn't seek to overturn a valuation on which an LPT return had been prepared, so long as the taxpayer had documentary evidence to back up the basis of what they put down in the return. So that would include things like data or print-offs or links to various websites giving property pricing, and indeed revenue's website link also, which gave property pricing. So we have that on record. It's on our system as well, up on our website also, if you need it as reference, if there's any issues. I think the message from revenue, which they were fairly consistent on, is they wouldn't be actively seeking to disturb any valuation, so long as they weren't off the wall and reasonable. The other issue then we were made representations on was the surcharge. It looked likely that there might be a double surcharge exposure if there were arising on the 2020 income tax returns, and revenue issued an e-brief confirming that the 2020 income tax return wouldn't be impacted by the LPT 2022 tax return. So it was just any irregularities on LPT from 2013 up to 2021, which would generate a surcharge for the 2020 income tax return. And we also made representations on the agent link, which doesn't have an entry for local property tax. And we know that there are extra steps that an accountant has to take in order to link into the records of the LPT records of a client. So we're working on that with Revenue. Just exchanged emails again last week looking for the info to be gathered or captured up front when an agent is engaged by the client, whereby they can capture the property ID number and the address and get the requisite authorization from the client such that they can access the LPT records. Because I do know it's a time drain, and I did emphasize that to Revenue. Anything that you did to make it easier would be really helpful. And there is also talk that Revenue are going to try and develop the pre-populated income tax return and corporation tax return to flag if there is an LPT irregularity that might result in a surcharge. So at least, you know, the irregularity can be sorted out before the tax return goes in and avoid a surcharge applying. We are currently about to make, or we have made representations to Revenue on My Inquiries customer service standard. That is still 20 to 25 days. We wrote to the Revenue representative of Main Talc there during the week, and we'll be discussing it next Tuesday. We think it's fair that the customer service standard is reduced, given the fact that Revenue's phone lines remain operated on a restricted basis. Most of them are operating from 9:30 to 1:30, and I know there are a lot of delays and a lot of holding time in order to get through. So we feel like it's justifiable at this stage that Revenue would hang their hat and back a lower customer service standard of, let's say, 10 days for My Inquiries. Now, this is achievable given what you're telling me, that the My Inquiries turnaround is reasonably good and that it does generally come back within 10 days. And the same would be evidenced on the output or the feedback given to us by Revenue. However, there is probably about 20% of exchanges that go on the My Inquiries that do fall out of the 10 days turnaround time. So we'd really like those addressed, and we'll be talking to Revenue about that on Tuesday. We are also meeting Revenue next week to talk about invoices for freight handlers. We do understand that there's a significant delay in importers and businesses who deal with freight handlers getting the actual invoice. And as a result, then there's a delay in VAT compliance and customs compliance. Now, Revenue are seeing it that is a problem also on their side. They have as to why there was this kind of a slippage going on. So as a practical solution, we're asking them to allow the accountant who is linked to a client for VAT purposes to have access to the customs records, so they can see what information is being filed in real time with Revenue, and so that they can support their client and try and get their VAT and the customs compliance data done on a timely basis. So we'll be talking to Revenue about that, I think about Wednesday next week. And just to say that we also raised, it comes up every so often, maybe every 3 or 4 years, the VAT 56A form, which is for zero rating supplies where a taxpayer has generally zero rated business. So in order to get that arrangement in place with Revenue, the form asks for the accountant to certify turnover and provide accounts or provide details up to the date that the form is actually submitted. Now, the long-standing arrangement is that Revenue don't look for the certification; they look for a letter from the accountant setting out the actual turnover based on wording which is allowed under the regulations here with ourselves and other accountancy bodies. And they will also accept accounts which are ending within 12 months of the application. Now, that is going to be on the minutes. I'll put those minutes up on Tax News as soon as they become available, so you can keep them and have them ready for the next time this becomes an issue, because it just generally swings and roundabouts. I don't think the form can be changed because it is a European form, really. It's to do with VAT is a European Union issue. So anything that they change usually requires some kind of authorization from the EU. So they are required to put that information as it is, but there is this long-standing arrangement. I just want to finish off by telling you about our representations this year. We've made 26 submissions, formal submissions to Revenue, the Department of Finance, HMRC and the Treasury. Some of them have been successful, some of them we're still chipping away on. Our representations are informed by feedback we get from yourselves, which is really helpful. And there were a lot of action points that I got out of the last webinar, which we were able to put in place. And we also get feedback from the committees that work with us and the volunteers. Then we would have members who would voluntarily give up their time and come along to very long TALC meetings with us and support us, because they're the ones that are on the ground who have the day-to-day experience of it. So I just want to say thank you very much to all those volunteers who give up their time. That's chargeable time out of their working day that they give. And it's generally of a broader interest than anything that would directly impact them, but they do that for the profession. And in particular, the chair of our tax committee, South Peter Vale, he, as I say to him, his electronic ink in his pen must be dry for all the letters that he signed out to do with difficulties facing small and medium-sized practitioners in meeting the deadline. He has made numerous representations and taken time out of holidays. So just wanted to maybe shine a light on the work of all those unsung heroes in helping us and supporting us on our representations that we make on behalf of the profession. So that concludes my roundup, and I'll be happy to take any questions there. I see a few have come in on the chat.
Absolutely, no, that's great. There are indeed a few questions. I mean, you're just 2 minutes inside of time, or if there's any of those that you.
Well, okay, there is actually one thing I asked you, or should have mentioned to you. We have an arrangement in place, or agreed with Revenue about IXBRL deadline, which is coming up now on the 23rd of December. So if the company or has experienced extenuating circumstances due to the impact of COVID, well, then the company can seek to you file the IXBRL accounts when you can, and you have to notify the caseworker in Revenue of the extenuating circumstances. And Revenue have told their caseworkers that this will be an issue, and they will see more requests for surcharges to be lifted, and for gross and for group loss relief and single company loss relief not to be impacted by late submissions of IXBRL accounts. So we have information of that and the actual wording provided by the Revenue officials that we discussed it with. And there's also a pathway on the My Inquiries questionnaire as to how you would go about making this case on behalf of a client. But there is, just as it's inconsistent with the general pragmatic approach that's been taken by Revenue to recognise that there are issues arising due to COVID-19, and like everything else in an accountancy practice and in business, the final sign off on accounts has been delayed by some, but a small portion from the feedback I'm getting, but nonetheless, there is provision there in terms of the IXBRL deadline.
Very good. Thanks.
That's definitely me now.
That's definitely an honor. Thank you very much for that. The end of another very busy year on the tax front, with some notable successes there to talk about. And once again, I would totally echo your thanks to our volunteers, who we really couldn't do it without them. So thanks very much, Nora. And now we are going to, and I know Nora in the background is going to look at one or two of those questions that came up. So thank you very much, Nora. I think you're still there, and I think you're going to stay with us for the rest of the broadcast. Now we are going to turn to looking at audit and regulation, and to do that, maybe even touch on anti-money laundering. So I'm delighted to have Anne Cullen on from Professional Standards, the head of audit monitoring and professional standards. We're going to talk to me about what they're seeing when they go out and visit firms, or not so much go out and visit firms, but do the thing electronically. And you were on earlier on in the year, and I think you caught the tail end of a very, very packed program. The very last thing that we said when we were talking last was that you should certainly come back because we had loads to talk about. So you're very welcome back. And just continue that conversation. I think when we were talking last, you were saying that I think all monitoring visits at the moment are being done online. Am I right in saying that?
Yes, Conal, that's right. And probably the last time we were talking, we were hoping that by now we might be back to maybe some sort of, face-to-face contact. But obviously, like everything over the last 2 years, it's impossible to plan. So we are continuing to do all monitoring visits of all types: audit, anti-money laundering, investment business, practice monitoring. The term we use is remotely, which essentially means that we are not going out face to face to meet people. Really, it's a wait and see, day by day approach. As I said, it's so difficult to plan. So to be quite honest, at this stage, we certainly don't anticipate that for at least the first quarter of next year that we would be going out face to face. And we've had a look at how we do things, which I did mention the last time also. And we have found this remote approach to be reasonably successful in many cases. And we've had very good feedback also from a number of firms in that they have liked this approach. From lots of points of view, that people feel that they can provide us with the information, they can leave us to do the work, and they feel a little bit freer to be able to continue with running their practices and doing their day-to-day business, not having us in their offices. So, and from our point of view, equally, there are benefits to it. We're not losing travel time, etc. We do make use of Teams, enormous use of Teams. So we are seeing people, we're just not physically side by side. So we anticipate going forward, as I say, that we will probably do a mix. There are some cases, of course, where it would be more efficient and more beneficial to be out on site. But in other cases, the remote visit works just as well. So we expect we'll do a mix, or we may well go have some face-to-face meetings with practitioners and do quite a considerable amount of the work off-site. So it's, as I say, let's see how we go with it. But certainly in the immediate future, we will be continuing to do them all remotely.
Absolutely. So, and just to talk about the process, I mean, I'm a practitioner. I get a communication, presumably an email communication now to say that they're due the monitoring visit. They may be expecting it, but what they may not necessarily be expecting is, well, what's the process going to be like if this is going to be all virtual?
Sure. So for the most part, where we can at all, we are contacting practitioners by telephone to explain the process to them and also to agree the dates. So rather than just sending people out letters with dates on them, we're finding, there's so much going on at the moment. We appreciate that people are busy. Obviously, with audit in particular, we are confined by statutory cycles. So there are, we are limited in flexibility from that point of view. But that being said, we will work with people where we can at all to try and find dates that are agreeable to people. So you would have a call, as I say, you would be talked through the visit process. The process really involves not significantly different to what we would have done when we were going out on site. We ask you to provide us with some information in advance. Which is very much similar to what you would have been asked for if you'd had a visit previously. We set up an opening meeting, and the inspector then contacts you, holds that opening meeting, and at that opening meeting will talk to you then about the practicalities of how best to get the files from you. And that works differently depending on the type of visit. Obviously, audit files are considerably more bulky than what we would be looking for example, on anti-money laundering. So in anti-money laundering, it's fairly straightforward. We ask you to send us in the documentation that we're looking for electronically. With audit, when the inspector will talk to you, some firms are set up, they're either willing to scan files to us, or they might have electronic systems that they can give us access to. A lot of firms still have paper files.
Yeah.
And in those cases, then again, speak to the inspector when the inspector contacts you. In some cases where it's practical and where both parties are agreeable, the inspector may well decide to go and collect the files from you. That obviously depends on logistics also, where you're based and where the inspector is based. And in other cases, we're using couriers or registered posts. So really, we just agree what works with the firm. We haven't had any difficulties in terms of getting files, to be honest. And we have managed to find a solution in all cases that both parties are happy with.
Absolutely. And I know the firm dropped them off to the institute, they were telling me. That was
Yes, absolutely. They can drop them off to the institute. That is another option. Yeah, absolutely. So that has been done. And then in terms of the process, once the inspector gets the files, the process is very similar to what it would have been previously. They review the files, they email queries, they ask for replies in writing. They will then contact the firm and have a Teams call to discuss them. So exactly the same as if we would have been out on site. Clear what can be cleared and whatever else will be brought to the closing meeting, and a closing meeting is held again via Teams. So and we also, the other thing to say is, because the dates are agreed in advance, we stick to doing the file reviews on those dates. We ask people to turn the queries around on those dates as they would have if we were sitting in their offices, and we endeavour in as many cases as we possibly can to hold the closing meeting the same week we've done the file reviews, and we're managing to do that in most cases. Obviously, occasionally it will run on, but in most cases. And we find, from the point of view of the firms, then you don't have the visit dragging on. That was a little bit of an issue when we started this in the beginning, but now we're getting the whole thing wrapped up on the dates that we've agreed. So it's working from that point of view.
That's good, because I mean, obviously, it's the time factor is important to people as well.
Of course,
you couldn't really describe it as being something that, you know, is unchallenging. It's not. It is a slightly challenging, somewhat challenging process, but people do want it to be finished on time. And
absolutely. And you know, we fully appreciate that it is a challenging process. And I always say to people, we approach it, you know, the purpose of our visits is to ensure that audit quality is of a sufficient standard. So where we can add value, we're happy to do that. We are certainly not approaching these visits you know, with the approach of trying to make people's lives difficult or trying to find trouble for people. That is not the way that we approach them. We hope that we bring something, you know, when we do these visits.
Absolutely. Okay, and talking about findings that you're seeing on files at the moment, what are you seeing on you know, what's obviously, in my experience looking at files, I think most files are reasonably well documented. That's what I come across when I look at files. But I guess people, it's always the negatives people want to hear, because they want to try and not make sure that doesn't happen on their file. So they want to hear.
So maybe if I start with audit, Conal, given that that's my my bailiwick as such, and you're absolutely right, and we see loads of good audit work, you know, and that's very important to emphasise. In terms of issues that we're seeing at the minute, maybe if I just run down through a few sort of themes that we have been seeing, and one that has come up recently, well, one that has been here for a while, is in relation to ethical standards and people's familiarity with the ethical standards, and in particular the provisions in the ethical standards around long association and around provision of non-audit services. And what I would say to people is, go back, have a look at those standards again, have a look at the applicable safeguards, familiarise yourselves with them. Also, make sure on your audit file that you demonstrate that you have looked at these, that you have considered the standards. In relation to long association in particular, our view would be very much, you know, you need to be able to demonstrate on the file that you have assessed the significance of the threat in relation to long association, and that where there is a significant threat, that you have applied appropriate safeguards in order to mitigate that threat. So what we are looking for is evidence of your thought process. Have you thought about what the threats might be? Have you thought about how significant these threats are? And have you thought about whether or not you need to apply safeguards? And if you do need to apply safeguards, look at the standard and apply the safeguards that are set out in the standard. Equally, in relation to ethical standard points, if your firm has a policy, for example, on something, you know, apply that policy, and don't simply note on the audit file that you're going to apply the policy and then ignore it and not apply the policy. You know, because we will be looking to see, have you applied the policy? Equally, don't note on the audit file that you're going to apply a particular safeguard and then go and do something completely different. Or nothing at all. So, you know, make sure that what is on the audit file is actually what you have done. So, so they would be the points I would make in relation to that. In relation to non-audit services, particularly where you're availing of the PACE, ensure you have the appropriate disclosures in the financial statements and in the auditor's report. And again, that you just have recorded your considerations on the audit file. Another issue that has come up relatively recently, and we don't really know the reason for it, one we haven't seen in quite a number of years, is in relation to independence issues, and particularly prohibited relationships and what is prohibited under the Companies Act. Now, we've seen this a couple of times recently. We've seen where people have acted as auditor to companies where maybe family members are involved. In some cases, we have seen people act as auditors where they themselves are involved in the entity. And we have seen cases where people have acted as auditor, but close connections are acting as company secretary. Yeah. So again, revisit these. I do appreciate there are loads of pressures with the pandemic and with everything else. Maybe people have just taken their eye off the ball on these things, but these are issues which our committee would view as serious. They are set out in the Companies Act, and you know, I would say to you, try not to fall foul of them.
Absolutely, and there's a provision in the Companies Act, first and foremost, be independent. It's there, just a single line in the Companies Act. You must be independent before anything else.
Equally, sorry, I know we're we're talking on here, but also in the ethical standards, you know, and don't forget about the overarching principle in the ethical standards. Even if you can't see something in black and white that tells you you shouldn't do it, there is that overarching principle. Would a reasonable, objective and informed third party conclude that your independence was compromised? So do have a look at that also and think about that.
Yeah, I guess if you feel a bit uncomfortable about it yourself, it's quite likely somebody else will. So it's worth applying that principle in the first instance.
Sure.
But yeah, that's yeah. Look, all of these are really important stuff to know, because these will be called out on audit files if you come across them. What about? I know we obviously spoke a little bit about this before we came on, and you were also with skepticism, and people need to be skeptical.
Yeah, absolutely. And that requirement for professional skepticism has been in the ISIS now for quite some time. This is something, obviously, given everything that has been going on in the world, this is something that our supervisors, IASA and FRC, have a real focus on, and that we are looking for people to demonstrate that, you know, they have challenged management. They're not just taking what management says and accepting it, that they have challenged, that they have done sufficient audit work on it, and that, again, the audit file demonstrates that. And in particular, you know, around areas such as ISA 540, audit of accounting estimates. You know, again, just look at what the client has given you, have a think about it, and ask and just make those probing inquiries. And again, where you do that, please record them on the file. We have come across cases where, and we completely, you know, we don't doubt for 1 minute that firms have spoken to management, have even seen documentation, but there's no record of it on the file. It might have happened a little bit after the audit work, prior to the audit report being completed, and it just got left off the file or what have you. But if you've done the work, you know, please do make sure you record it. Also in respect of ISA 570, and obviously we have ISA 570 revised now, so there are the enhanced requirements there where that applies. But you know, both in respect of going concern, both at the planning, at the risk assessment stage, we're expecting to see considerations there, and also at the completion stage, and that applies regardless of whether or not there is a going concern issue in the entity. And again, the same professional skepticism, and in other areas of the audit, really throughout the audit file, we're looking for firms to demonstrate that they have thought about that.
So an example where somebody wasn't applying skepticism might be, for example, if you have a bad debt provision in there which seems too low, but the person accepts the
exactly, and you know,
previously
we might have seen, firms might have said to us, but I discussed it with management and they said it was okay, they were happy. And a firm accepting that, well, you know, that's really not sufficient challenge. So you need to go and do more audit work on that yourself and assess, do sufficient audit work to be able to form your own conclusion. Is it actually okay?
Yeah, absolutely. And there's sort of, I know in the new PQAs, we've given people a toolkit of where things are more complex and not addressing the PQAs. There's a toolkit at the back of the new PQAs now, if you're using those to help you. So you don't have to use it unless the situation comes up, but it's there for you if you so need. And yeah, I mean, it does seem to be that the bar has been set higher, and I suppose it's a reflection of sort of the high profile audit failures that are out there. But this has been fed back, I presume, to smaller audits, and that the bar has been raised.
Oh, absolutely, absolutely. And I mean, this our supervisors, you know, this is applicable to all audits of all sizes, to all firms. The work that we do out there when we're monitoring is subject to oversight, and the feedback that we get then obviously trickles down. So the expectation is there regardless of the size of the audit.
Absolutely, absolutely. And don't forget, you can contact us in practice consulting as well. We'd be happy to talk through issues that people might have, just to talk, you know, just to get our view on it ahead of time. Obviously, we don't make audit opinions, but we can certainly give you support. And you know, people saying, well, what will a reasonable person think here? We can give you our view on things, and give you, you know, provide a bit of challenge to you ahead of time. So we're there for you. Anti-money laundering, and it's obviously it's I mean, auditing is obviously a subset of practitioners, but anti-money laundering affects everybody.
Absolutely.
All practitioners are required to have anti-money laundering procedures, and they're monitored. And I know your teams are going out looking at that. What sort of things are you seeing? What's coming back to you?
Just to say, maybe before I start talking about what we see, you know, obviously, as everybody will be aware, there's an increased focus on anti-money laundering. We are seeing a ramping up from both governments on both sides of the border, the UK and the Republic, in respect of their focus on anti-money laundering. So we have started doing anti-money laundering only visits for that reason. So the types of things that, and in some cases then we do combine them, but we are doing a lot of anti-money laundering only visits. The types of things that we are seeing are really the bread and butter sort of things, to be honest. Now, in many cases, in fact, the majority of the cases, we are seeing people are compliant with the requirements. But the sorts of things that I would call out: ensure that you have written procedures, ensure that you apply those procedures on the files, you know, and make sure that you evidence your customer due diligence, you know your client, and your risk assessment. It's all very well saying, sure, I know the client for 20 years. There must be something on the file to back that up. And really the best way of doing that is through using checklists. You know, if you use the checklist will guide you along the way, and you really won't go too far wrong. Where firms haven't used checklists, it's really more difficult to evidence exactly what they have done on the files. Also, the requirement to do a business risk assessment.
Just the whole firm. The
whole firm. So that involves looking at the risks to the firm. So you're looking at your client profile, you're looking at geographical location, you're looking at location of where the firm, it's your own firm operates. There are lots of things to consider in that. So again, that needs to be carried out, and it needs to be documented. Anti-money laundering compliance reviews need to be carried out, and again, need to be documented. And where issues are identified in those compliance reviews, we will be looking to see, have you taken action to address those issues? And then the final point that I would raise there is in relation to training. Ensure that your anti-money laundering training is up to date. It's an evolving area, as everybody knows. It is changing day by day. So just keep an eye out for those updates, and make sure that you do have sufficient training.
Absolutely. And I'd echo all that. I'd certainly say also do register in ROI for GoAML, the Garda website, and in Northern Ireland for the SARS portal that the PSNI have. So please do that, and do make those reports when necessary. I know in Northern Ireland we are looking at SARS now. We will actually look at suspicious activity reports as part of the process. Certainly, I know Aidan was on Wednesday on an anti-money laundering course, and certainly he also referenced the UK report on anti-money laundering monitoring. I think
that's right.
We published one of those, and it's very interesting reading.
It is, absolutely. And in terms of SARS, we are looking, as you say, at the process. We have had feedback from the regulators on, I suppose, what they deem to be a good SAR. So, you know, that the information needs to be clear in it, and you know, that the information needs to be relevant. So that's the approach we're taking when we're looking at SARs. It's not that we're looking to see, should you have reported or shouldn't you have reported? It's more the clarity of the information that's contained in the SAR.
And that's the equivalent of the suspicious transaction report in the Republic.
Republic.
We don't look at, I don't think, at the moment, but you know,
but who, you know, as I say, the focus is increasing all of the time. It is likely that it will come down the tracks that we will start looking at that also.
Absolutely, that seems to be on the way. Okay, that's listen. I think we're almost out of time. But there were I think two more things you said that you really just wanted to reference before we were finished. The CPD guidelines. You said you'd like to.
CPD guidelines are on the IASA website. They are effective actually from January 22. They are going to change how the Institute monitors RI CPD, but it is also relevant for responsible individuals to look at them because they do set out how you need to think about your CPD, how you need to record your CPD. We as an institute will have an obligation to monitor the CPD of every RI at least once every 6 years, to issue a report as a result of that monitoring. So you will be required to keep your records for 6 years in order to facilitate that monitoring. RIs will also be asked to complete a CPD declaration, and the records that the CPD must, that the RI must maintain will need to evidence things like, has the RI identified what CPD he needs to achieve, what the learning outcomes are, all that sort of thing. So I would just direct you to the IASA website, go and have a look at those CPD guidelines, because you will be hearing a lot more about them, and they will be relevant in terms of how you approach your own CPD.
Absolutely, and there's a hard requirement for 15 hours audit financial report in that area. Am I right in saying that?
I'm not certain about that, Conal. I would need to check that. There was talk of it, but I'm not sure whether it made its way in the end or not.
Yeah, absolutely. I'd have to check that for myself. We'll keep everyone informed of that in due course. Okay, listen, that's and finally, you want to mention about the option for people to register for.
Yeah, just it's renewals time around now for Audit Reg, and just to remind people that we did introduce an option during this year that you can elect to be audit registered either in Republic of Ireland only, in UK only, or both. Bear in mind, if you choose to be registered in both, you will be subject to the requirements of both jurisdictions, and there will be additional requirements in some cases. An example of that is the IASA CPD guidelines. Yeah. So if you are registered as a Republic of Ireland auditor, even if you are not actually auditing any Republic of Ireland clients, you will still be required to comply with those IASA CPD guidelines. So it's just to remind people, maybe something people want to have a think about at renewal stage if it applies to them.
Absolutely, listen, Anne, thank you very, very much. That was a great update. It's great to hear all this, and for people just to have a chance to reflect on it, and to see what can I do now to change your audit files, to improve the quality of the audit files, to do those bits and pieces that are perhaps the low-hanging fruit, if you want to call them, that we can just do one or two things to improve the quality. And much appreciated. Thank you very, very much. It's great. I can see questions coming in. We haven't had a chance to stay with them. Would you stay on it? Are you
yes, absolutely. Okay. Yeah.
I want to move on now to the Brexit piece, but I say we also like to try and answer those questions if we can. So I can see a couple there. We'll get to you. Myself and Anne will get to you at the end, and we'll see if we can answer those questions the best we can. So thank you very much, Anne. And now we're going to pass back to Jeremy and Crona to talk to you about Brexit. So.
Indeed. Thank you very much, Conal, and thanks, Anne, as well. A very, very insightful piece and relevant to all practitioners. Yeah, Brexit is our final piece for this morning's session, and it definitely does seem to be an issue that we've been hearing about constantly, unfortunately, for the last 5.5 years now since the referendum. And I know there has been at times progress made and different things such as the agreements and so on around Christmas last year. But now we decided today that, look, it's 1 year formally into Brexit since actually Britain has formally left the European Union, and just really time to take stock and see what have been the impacts, particularly for Northern Ireland, for our practitioners, for their clients, and also just really any resources that the Institute has, any guidance and assistance that we've provided, and just to make you aware of, but also to take a look ahead as well into 2022. I'm sure we're all used to hearing on the media about Article 16, will it not happen? What would be the implications there? I'm delighted to be joined by Crona Clohessy, our public policy lead, and Crona has actually been for about the last 2 years, I think, our Brexit lead as well, and she has been very, very busy and with the rest of our colleagues now at FCN Voice and also outside collaborators, and putting together a lot of guidance in this area. So Crona, you're very, very welcome to join us. I know many of you will be familiar with Crona. You're a fellow chartered accountant, tax consultant, and I think you've worked about 5 or 6 years with the Institute already, yeah?
Yeah, coming up on 6 years now, actually, yeah.
Very good. So you're here a little bit longer than myself now, as I say. But listen, Crona, I suppose firstly, just to kick off, as I say, we were talking there in recent days and so on. I know you've kind of lots, I suppose, of just different updates really and things you'd like to make people aware of as the latest guidance or different issues. So I'll leave the floor to you to tell us about the latest news really and just things that you think members should be aware of.
Yeah, thanks, Jeremy. Yeah, look, I just want to talk for a few minutes. I'm going to pick out a few different areas that we're currently lobbying on in the whole area of EU exit. So look, throughout 2021, since the UK has departed the EU, we've been meeting and corresponding with UK and Irish government departments and officials on issues that have concerned our members arising out of the UK's departure. So one of the issues, I suppose, is relevant as an all-island issue really, is the whole area of whether a director that's resident in Northern Ireland can sit on the board of an Irish company. So this is an issue that's lots and lots of members have contacted us directly. And I know, Jeremy, you've got a number of queries in as well. So just to say, I mean, by way of background, so Section 137 of the Companies Act in Ireland requires that an Irish company have at least one EEA resident director on their board. So a lot of Irish companies had traditionally satisfied that test by including a director that's resident in GB or NI. But since the UK departed the EU from the start of the year, the UK is not considered to be within the EEA anymore. Now, this has obviously caused a lot of concern because of the traditional way Irish companies would have been structured. So we, at the start of the year, wrote directly to the Taoiseach and the CRO just to get clarification on this whole issue as to whether there'd be any, leeway for NI resident directors to sit on the board, because you could have a situation whereby you have an Irish citizen who's an NI resident director who is now not able to sit on the board of an Irish company. So there's all sorts of, I suppose, difficulties in that. And also the TCA, which is the free trade agreement reached between the EU and UK, the wording around this whole area was a little bit ambiguous, and it talks about how a person of a particular nationality are not required to be appointed as a director. So long story short, we've had, I can't even count how many letters we've gone back and forth on this issue. And the long and the short of it is that the Department of Trade and Enterprise is still awaiting legal advice on this matter from the Attorney General. Now, look, to put this in a practical sense, obviously a lot of companies in Ireland have had to file the B1 annual returns. Last month, I think there was a huge number being filed, and the issue for them was, and I know lots of members have gotten in touch, is that they weren't able to file the B1 annual return unless they put in two of the mechanisms to get around the requirement of Section 137 being a bond or a revenue exemption. So I know that's been costly, it's been administratively burdensome for companies to have to do that. But just to say, look, we're still on the case on the issue. It's disappointing that we haven't had any clarification. I know it's not just us lobbying on this issue. I've spoken to lots of company secretaries across our member firms that are looking at the same issue. One thing that the department did point out was that they had communication with the CRO to say that not many people had individually made representations on the issue. I think a lot of members obviously have been going through us, but just to say if it is something that you are struggling with, please feel free to make your own representation. Obviously, we are continuing to do that, but I suppose the more the merrier in this case. So I hope that's an overview of the issue without going into huge amounts of detail. Jeremy?
I think it is, as I say to you, I know it's been very frustrating, and thank you. As I say, it was definitely one of the issues that you've been always trying to follow up on, and it's very frustrating both with the CRO and with Minister and Taoiseach Varadkar on this one. You're right. I know as we come to the end of the year, there has to have been a practical solution found by many companies as well, which is very upsetting and workarounds and costly too. Hopefully, there will be some sort of a common sense approach found here, and the legal advice is awaited a long time. But I suppose just to say to anyone, yes, we are constantly following up on this issue. But yeah, if you do feel still frustrated, or anybody here from Northern Ireland, definitely feel free to contact Minister Varadkar or actually the CRO directly on this, because they did come back to us and say they weren't hearing from issues and from people, and that we know definitely that is not true, that people are not having problems with this. So yeah. as I say to you, I know you've had many, I suppose, other great, very good collaborations as well, be it with HMRC, TSS webinars, and also as we look ahead, I suppose it's a changing time too. I know for GB EU, 1 January is a key day with potential customs checks and so on coming in. Is there any, I just saw an email there, and I know you regularly have your bulletins, which actually we have a link to your Brexit Hub on the next slide coming up now, and basically where you have bulletins, and you also, one of the stories there is about, the middle one there, which I've just taken from the website, is the full customs controls from 1 January 22. Is there anything particularly to make the members aware of on that one, or anything else you'd like to just highlight of, there's a good webinar there, there's something we've been collaborating on and that we need to know about this?
Yeah, just really briefly, I suppose, on the customs checks in Great Britain. So this is not trade between ROI and NI, it's only on trade between the EU and GB, which obviously includes ROI. So throughout 2021, I suppose, to give businesses a chance to prepare for new border controls, obviously the impact of COVID, the UK took the decision to defer a full customs declaration when goods are moving from, let's just use the example, Ireland to GB. That's now changed. So they have what's called a border operating model, which they regularly update. But what is definitely coming in 1 January is full customs control. So at the moment, what traders are doing, if you were exporting goods from Ireland into GB, the importer on that side, while full custom controls are in operation in ROI, because we're obviously following the rules of the EU, which we have to, on the GB side, we've had what's called delayed customs controls, whereby you file a return and then 6 months, you file such a certain amount of information, and then 6 months later you have to file a full customs declaration. So that's all changing now from the 1st of January. So there was guidance published this week from the gov.uk, and so I'd be really, if you have any clients in this space, it would be a really good idea to look at the new procedures, which mainly affect an import site, but where they do affect an Irish exporter is in the whole area of agri-food. So I know the Department for Agriculture last week issued a reminder to exporters from Ireland of products of animal origin, like meat, dairy, fish, composite products, that there's a pre-notification requirement now when those goods are sent across to Great Britain, and that's the responsibility generally of the UK importer. But you need to probably liaise with the importer on that side of the transaction to ensure that the proper procedures are in place. And just to say, finally, I know I could go into detail on this all day, and I'm really up against the clock, but just to say that these new procedures apply for goods going from Ireland to GB, but also for goods that are going through GB to get to the mainland EU. So if you're using GB as a land bridge, you also need to consider these new requirements that are coming down the tracks. And Jeremy, if I might just mention, because I know we have some NI listeners on the call, and the Trader Support Service has been a good support for traders moving goods in and out of Northern Ireland. It was a designated system set up on EU exit to help move goods essentially into Northern Ireland and help traders deal with the new customs checks and controls. To date, I think there's been 1.4 million consignments of goods actually dealt with, so it's quite significant. But just to say that the TSS was initially set out as a 2-year system, and that is due to come up for completion next year. So we have been in contact with HMRC, the TSS consortium, the other UK government officials on this, and we have formally requested that the system is extended beyond 2 years. And really that's on the back of a survey that we did with members. Like 80% of respondents to the survey really felt that they needed this system to support them in completing customs declarations, and only 10% felt that if the system was removed, they wouldn't have the required expertise. So I think we're all aware that there is a deficit of customs knowledge and expertise in the market, and any of the customs agents that we have are fully maximised. So just to say that we are making that representation, and we are hopeful that it will extend beyond the 2 years. And obviously, I suppose that leads in nicely to the, uncertainty over the protocol. So all of this will all depend really on what happens with the protocol. Jeremy, I know you're probably going to ask me a question on that, but
yeah, no, it's I'm asking you, of course, to get out your crystal ball and tell us, as I say to you, what could happen here. I know, of course, Article 16 is something we're keep hearing in the media, and that if it's triggered, if it's not triggered, I suppose particularly, and it's something you were very insightful in our call with earlier in the week, is that, look, if it does happen, what could be the immediate ramifications? Is there kind of a buffer period? Does things change immediately, or what could be the thing if it did come into play?
Yeah, so look, I suppose if Article 16 is triggered, there are mechanisms within the protocol to deal with all this. So the thing is to say is that nothing can happen immediately. So there has to be a month cooling off period essentially, unless there's exceptional circumstances. So we're hoping that won't be the case. So basically, if negotiations fail and the UK want to implement X, Y, and Z, they can't do that for a month. Then when they do implement that, after 3 months, it has to be reviewed. Now, just to say the legal ramifications, I mean, there was a lot of talk about whether a border would just immediately go up on the island. I don't think that's the case, but the EU are looking into that from a legal perspective. But just to say that, I mean, I suppose the commentary coming out from both sides now is that Article 16 won't be triggered this side of Christmas. It does look a little bit more positive. I know the EU this morning put forward some proposals to solve one of the deadlock on medicines, because at the moment there's a difficulty getting medicines from GB into NI, and I suppose that really maybe in a way should never have really been part of the protocol in the first place. But look, there's lots of measures on the table. I mean, for example, just very briefly, the EU have put huge flexibilities on the table. I mean, they're talking about reducing SPS checks by 80%, customs paperwork by 50%. So it's not insignificant, the proposals on the table. But equally, the UK have a problem with the ECJ being in jurisdiction in Northern Ireland. And that's a big sticking point. Now, to say we haven't really had many businesses, anybody really come to us and say that would be an issue. But look, talks continue. It's kind of hard to see where it will go. Hopeful that there will be some agreement, and perhaps if we can get agreement on medicines, then the next baby steps will it'll work itself out. But it's very difficult to tell.
I'd agree with you there. From actually Stephen watching the news yesterday, I know Simon Coveney was in London meeting his UK counterparts, and there did seem to be, I suppose, a more conciliatory line here. You're right. I think the steps could be, if they can agree the medicine issue for Northern Ireland, that could lead to further stages. Probably no agreement this side of Christmas, but it seems to be from the UK side, they're less likely now than a month ago to go directly to the Article 16 route it ins. And it's good to hear as well from your viewpoint what would be the ramifications, so there wouldn't be any immediate effects and so on as well. Listen, as well, as I say, just to talk, I suppose, a little bit about the Brexit hub there. I know it's got great resources there going back over the last year or so. For some people, I know that it's something you mightn't touch upon very often. I know you always put out your Brexit updates as part of e-news, tax news. There was formerly a newsletter as well. You can get a lot of those things there, and you can actually, they come more part of the tax actual updates. So there's a lot of relevant stuff there, even to just go on to the Brexit hub. And it even gives links as well. You mentioned about the deficit in customs expertise. We're still running, as I'm aware, the customs certificate for people that are going. It's been very popular in the last year to 18 months. So if you are thinking about that, or maybe a new practitioner, somebody starting out, definitely is a good option and something to consider. And there's a whole wealth of materials there with relation to the actual Brexit. Just going to take a look here, Conal, and I know we've had one or two people, let's say, coming in and just asking questions here. One is relating to the legal advice coming back from the Attorney General, asking how long has it been. It has been about 6 months or so that it's been with the Attorney General, as far as I understand from communications from Antónis Varadkar back about that stage. Yeah. So it is a major issue. Again, we keep following up and trying to actually get a bit of movement on this issue. But yes, what we understand, the sticking point here is the advice to allow the COO or to allow the Department of Enterprise to move forward is still awaited from the Attorney General. And to put it bluntly, that is too long for this issue that is affecting so many. But we will try to keep pushing that, as I say to you. And as I say, there's other things there, Conal. I know there's some questions that are more actually, I think, more audit related and so on as well there. Yeah.
Well, I mean, there's one there. Very good update from Anne. Could be done twice yearly on the practice news going forward. There you go. Won't put you on the spot just yet, but certainly it's great to do, and you're always welcome. One person asking us, just looking, trying to find here. It was about what about scanned client signatures on audit files? what is the view of that? Or indeed, I mean, one question that comes up sometimes is if you have an Excel file and you type in your signature on the audit file, as I often see, is there a view on that? I know Aidan, when I spoke to him about it, his view was, look, you know, it's not fundamentally different to a penned in signature. But I mean, is there what do you think of that, Anne?
Yeah, we don't have a view as such on that. You know, it is really, we would see it is up to the firm itself to be satisfied that the signature is a genuine signature and that their procedures are in place to ensure that. So you certainly, it's not something that you might expect that we would be raising an issue with on an audit file. It really, we feel that's a risk that the firm itself needs to address.
Okay. So that's, and yeah, like I say, I mean, the obvious thing from day one of ever looking for audit evidence is if you get, say, a black and white photocopy with a signature on it, you're always skeptical as to whether that is actually signature, because it's very easy to just move that around. But the more layers of protection you put for yourself to make sure that you are actually getting a confirmation from the client that this is from them and they concur with what they are saying, is,
absolutely,
you know,
absolutely.
is better. And you do tend to take the evidence in the round on files also. I think that's...
Oh, completely. Yeah, that is an important point to make. We do take the evidence in the round. Nonetheless, you know, if the evidence is not there, then we do have to say that the evidence wasn't on the file. So it's all very well telling us what you did. It's all very well that we can see quite clearly from discussions that you did perform the procedures. If you haven't recorded it on the file, we will still be bringing it up as an evidence issue, that the evidence wasn't there on the file.
Yeah. Now, as I say to you, I suppose as we are gone beyond the 11:15, but also there may be, I'll come back to you, Crona, now, because I know we're still talking with you. Have you any final point, as I say, that you'd like to make about Brexit, or anything else, as I say there as well, because you've been giving us a very insightful update there so far?
No, just to say, look, if there's anyone on the call that has any concerns about any issue that's impacting them as a result of the EU or the UK exit, just please email myself or brexit@charteredaccountants.ie, and we have weekly, bi-weekly meetings with UK officials, so we're more than happy to take those on board.
Well, Crona, thank you again for that very, I suppose, insightful update. I know it's a constantly evolving area, and I know it impacts particularly our members and clients in Northern Ireland, but right across these islands. And I'm sure we'll have you back on again in 2022 and more on this. We look forward to that. Nora, I know you've been probably very busy there as well, actually typing out some answers. You're always in demand, and you get no rest over this 75-minute session today. Have you any particular final points that maybe having coming up in the questions you'd like to say? I'd like to highlight that to the audience.
Well, yes, somebody raised the point there about exchange traded funds. There's a fundamental change coming down the line there on revenue guidance on those funds, and we do see it as an issue. There is a guidance deficit, and at the end of the day, taxpayers only want to know correct amount of tax to pay, and that's the point we'll be bringing to revenue this week. So we'll be talking to them on Tuesday, just raising it at main talc, and then an in-depth discussion at Talc Technical on Wednesday. But I just want to flag, to date, revenue have been reluctant to provide the level of detail that they previously provided on these type of funds. But we are aware that this is a challenge, and this is, it's something that's coming across the accountants' desks, and it's not really satisfactory that you can't give them a clear cut answer on what the tax treatment is. So I hope I can, even if I have to tell you that, look, further discussions are required, we'll put in some note on Tax News then the following week to tell you how we got on.
Brilliant. Thanks for that update. And Anne, as I say, you may have a final point as well to make, or I know you've covered so much there as well.
I know, yeah, I know. Just very briefly, if I could flag two things I didn't get to talk about. Coming down the tracks, ISQM will be applicable. The standard has been issued by the FRC. A consultation is out by IASA for both. It is expected it will be effective from the 15th of December, I think, 2022. Correct. It is something that firms need to start looking at now. It is not It is very different from ISQC. It is not a case of buying a new manual and setting it on your shelf. It is, you need to start thinking about quality objectives within your firm, risk assessments within your firm, and it is going to be an ongoing process. So just to flag that to people at the minute. And one other thing I wanted to point people in the direction of, FRC within the last 10 days or so have issued a very useful document called What Makes a Good Audit. Now, some sections of it are geared more towards larger audits, but in general, it's worth having a look at. It's in two parts. The first part relates to audit execution, and the second part relates to what constitutes a high quality audit firm. Definitely worth a look. Go check it out on their website.
We'll certainly do that. Thanks, Anne. Much appreciated. Just somebody else asked any progress in the protection and regulation of the term accountant. We don't have anything to report on that, we continue to endeavour to do it. Someone else asked, can ROI firms now send in non-audit UK company accounts to companies house in the UK without any UK ICAW authorization? I don't know anything to stop you from doing that. I mean, that's not regulated work. So, I mean, you can in fact do that as an accountant. But I'm not sure of anything to stop you from doing that in any country in the world with as a provided you have the competence naturally. With your practicing certificate. The practicing certificate only covers your work really in ROI and UK anyway. So that's as best I can answer that one. Jeremy, I don't know if you have anything to answer on
No, I don't think so. As I say, we've lots of we have a couple more people asking to say about the slides for today, and the slides, as I say, hopefully a lot of you have been able to download them there in the chat function. We will be sending them out afterwards in our actual follow-up email, so keep an eye out for that, and you get all the different links and so on too. And I know there's a couple more actually in the slides there. We have some just UK tax updates showing the work of the Northern Ireland Tax Committee, or UK tax lead Leon Shadoran, and particularly around the basis period reform, and actually making tax digital as well, a very contentious area. Some progress made. I know there's been delays for the last for a year or so, say for the implementation, and wise delays, but then there is more actually ongoing interaction as well with the Financial Secretary to the Treasury by Leontia and her team, so you can learn a little bit more about that there. And yeah, that's it, Conal. As I say to you, if there is no other questions, just to, I suppose, formally thank everyone as well, to thank Anne, Crona, and Nora for joining us this morning. A very, very informative and packed session, and also to thank Chris and the CPD team and everyone else for their help on the webinar too.
And you, Jeremy, for everything, for putting it all together, which is not inconsiderable. Thank you, everyone, and of course yourselves. So enjoy the rest of your day and have a good weekend. Thank you very much. Take care.